off.
What's that? So thanks for joining me this evening. I wanted to talk first about just a general overview because we always look at things from a top-down perspective first and look at the global macro outlook, and then which how we want to set the allocation as far as how much in equities we are investing versus how much in bonds, and then what sectors we want to be in. Of course, right now we're in a lot of sectors that will hedge inflation. So inflation is my biggest concern right now. So, for example, if you look at our portfolio, what you'll notice is a big chunk of our investments is in consumer staples. These are your Procter and Gamble's and Pepsi's and Coca-Colas and Kraft, which have done well this year. Also, international companies like Nestle or
Jim,
Unilever,
I can't hear you.
and then of course the healthcare. Can everybody else hear me, or is it just that one individual that can't hear me? Okay, everybody else can. So you have to call on the dial line if you can't hear me. Um, but then secondly, our healthcare companies are also generally a good hedge against inflation because they're able to pass on, and we've seen that in this earnings season, pass on the higher cost of drugs. And then, of course, energy companies have done very well, and you'll see that we have a good chunk of our portfolio in energy, 9%. And these are your Exxons and Phillips and Total, which is a French oil company, or British Petroleum. And that's one of the big. I talked more about inflation in the last conversation we had a month ago, and how we're positioning. And at that time, we were up in a down market, and we're still only down about 2% after today's sell-off, considering the market is down a lot more this year, well over 10% and in correction territory. And today the market was certainly not acting rationally. It sold off very quickly in fears, and then it recovered. But the sectors that recovered were sectors that recovered primarily in the tech sector, big tech stocks. Only if you look at really one of the reasons why it likely recovered was the futures for the Fed went from 90% at a 50% cut to 90% at just a 25%. So as soon as the futures, you'll see here in this chart, this is the futures for what the market thinks that the Fed's going to do. And we went from 90% of the market thinking that we were going to have a 50 basis point increase. And that was destabilizing to a lot of growth companies. And I think that we're going to see that trend because the Fed has to raise rates. Even if we hit a recessionary environment, you heard a couple of Fed governors come out with some more dovish comments. And when they did, because of the destabilization of the world very quickly, that kind of gave the growth investors the green light, the algorithmic models to go in and buy big tech again. I think they're a bit diluted on the growth side, and those are never the stocks that we're buying because I'm not going to buy those kind of companies for you or I that have crazy valuations and don't pay dividends. So you saw all of a sudden we went from a 90% probability to 50% to or 50 basis points to a 90% for 25 basis points, which I think has always been my base case. If the Fed's going to try to thread the needle and do 25 basis point increases throughout this year to dampen inflation, and whether or not they have to be more aggressive is yet to be seen. I think that it's likely that inflation job salaries lower, and 2, technological innovation. And then 3, eventually the supply lines will catch up, and supply and demand will start to wane, especially as we've seen mortgage rates go up to 4% relatively quickly. That'll dampen home buying and dampen automobile purchases and things where a lot of American consumers right now have a tremendous amount of discretionary cash on hand. So that's one of the things that we've seen very quickly is that with the Fed funds futures changing, that's something that the Fed is realizing. Hey, we have to fight inflation. We have to fight it rapidly. And even if we have a slowing economy, we don't want a stagflationary type environment. And they're going to do their best, as I kind of put this one slide in here, to keep it to a quarter point. When the Fed finds itself in a situation where they're raising quickly, the stock market never does very well. And you'll see that yellow line here where stocks are flat in periods where they're in fast tightening cycles. So instead, the green is no tightening, where the Fed's not raising rates, and the stock market usually does very well under those scenarios. The blue line is the Fed raising in a slow tightening cycle, and that's what they're going to try to do. They're going to try to do this quarter point, and do a slow tightening cycle, and that should still be relatively very good for stocks. And whether or not the Fed's going to be able to stifle inflation, economists are just guessers. We put our pants on one leg at a time, and just look at the economic factors, and things change very rapidly like they did today. So I just wanted to talk about inflation still, I think, is a major issue that we're fighting. And then secondly, go into the reason for our call today, which is the Russian invasion of Ukraine. And nobody knows. You're going to have a lot of pundits on television, whether they're reporters, whether they're my friends who are generals and my classmates, and when they get my classmates are 1-2 stars now, admirals and generals, and when they get into the 3-4, it gets much more political, as the colonels and the generals on this call know, and things are much more political when you hit that level. But nobody knows whether it's General Petraeus. I saw General Allen, who's a good friend of mine from my days back at the Naval Academy, and nobody knows what's in Putin's mind. If I was to guess, and I'm positioning portfolios best on our guessing, and you listen to what Putin is saying, his rambling the other night, I think it was Sunday evening late, was really nostalgic for the old Soviet Empire. And that's what's most concerning right now, is that, if he goes beyond Ukraine, will Europe and us, we're not going to get involved in the ground war. Nobody wants to, start World War III. We certainly haven't had a, European war. And I'm half Polish, so I'm well versed in history. And Poland has been occupied and free for very little time and occupied forever. And now they're a NATO member. Will Americans fight for Poland? As part of our NATO article, is that an attack on one is an attack on all. And, will we fight for Estonia or Latvia or Lithuania, these nations here, which I'm sure the Russian Empire would like because of its access, to the sea, or broader access to the sea that they have. And the answer is, we don't know whether NATO would do, whether the French and the United States would go fight for Latvia and risk a broader war and push back on Putin and Russia. We don't even know if the Russian citizens would put up with that, because they have, Ukrainians by nature they're already fighting, and they're fighting very hard. This isn't going to be an Afghanistan type of situation. They fought hard today to pull back the airfield, which was taken, and they're doing it. If they don't get Zelensky, and if they hold together for a long time, you could have a bogged down situation for Russia that they really don't want to be in. The attack today was very classic, as all the military people here know. Take out the centralized command and control. It wasn't just carpet bombing of the city. It was strategic in trying to take out the air power. So Putin is very intelligent. He knows what he's doing in terms of, he's trying to just quickly make a state much like Belarus, where he's in control of the state, and he would like to see Ukraine in that same type of situation. Because if you look at it, I always try to look at things from the standpoint of whether it's my wife's standpoint, or whether it's my friends, or whether it's people who don't like me, or the market and the other side of the argument. And I try to think of it from Putin's standpoint. You can see he feels like he's being surrounded, right? And this is probably emboldening and making Finland and Sweden start to think, maybe we should join NATO. Maybe it would be good for us to join this. And Putin certainly doesn't want that, because that would further surround him. So he may feel a little bit threatened, and may feel that he doesn't want certainly Ukraine to join NATO, and we didn't make the deal with him, and other nations didn't make the deal with him and say that, hey, we're not going to let Ukraine join NATO, although nobody really expects Ukraine to join NATO. So we're really unsure of what he wants. I don't think we would have a broader war. I think it's highly unlikely. we would certainly have a much bigger problem on hand. But most authoritarian dictators like the life they lead and don't want to lose the life they lead. They're just usually trying to hold on to power. And certainly Russia knows that if he was up against other nuclear powers, then that's not a positive thing for him. So from a portfolio standpoint, looking at this as likely is that Ukraine may lose more territory, or Ukraine, we could lose the whole country and it becomes like a Belarus situation. What impact is that going to have on how many Pepsis or Coca-Colas are consumed globally, and how is it going to impact Coca-Cola's earnings? Probably very little. So first of all, if you're my daughter's age, who just turned 23 yesterday, and I just turned 53 this past week, I would first say, don't worry about it. You have a long time before retirement. Your investment should be very, very long term in terms of your thinking. And for our clients who are in retirement, like many of you who are on this call, you're more worried about it. I would say we've been through this and worse before. We've been through wars before. We've been through financial crisis. We went through COVID a couple years ago. And the dividends have always been there for our clients. So I would ask you, do you think Pepsi or Coca-Cola is not going to pay their dividend if Russia takes over Ukraine? And the answer is, of course, highly unlikely that would be the case, that we would be in that type of situation. The broader is if we get into World War III, now we got a situation that's obviously much more different, and that's the thing that always keeps me up at night is nuclear armed nation or nuclear powers going head to head against one another. It's the mutually assured destruction is still very much in place, back from decades ago, where neither the Soviet Empire at that time or the United States want to get into a nuclear war, and the same with China. And China's watching very closely. They want Taiwan. We did very well with Taiwan Semiconductor, which we recently sold for valuation reasons, but also doesn't. I think that there could be issues there, and Taiwan's also, Taiwan is opening other factories because they're concerned about China's more aggressive actions also. And so you have this big battle going on between authoritarian nations and then free democracies, of which people who are free, especially being out here in Montana, the Montanans are very freedom is always on their minds out here, where it's just different more from, say New York City, where I go back and forth from every 2 weeks. It's more community based. So I think that freedom loving people are going to fight hard for their freedom once they have it. But from a portfolio standpoint, I would say, Kraft is still going to, people are still going to be eating Heinz ketchup and Kraft cheese. And your dividend, to me, is very, very secure. When you look at companies that we own, they've increased dividends through wars, like a Procter & Gamble through the financial crisis. They've increased it through good times and bad. And those are the kind of companies that I buy, for us. Kraft is up this year. If you look at it from the standpoint of, if I pulled up a chart on Kraft today, you'll notice that for some reason, safer stocks were down today. And again, we may see certainly that stocks sell off tomorrow still based on these fears. But again, if you look at a Kraft, the kind of companies we buy, people are starting to gravitate more towards safer type companies. And we bought Kraft during COVID 2 years ago, and you'll notice that Kraft has outperformed the broader stock market, and it's done it in a very boring way. I don't buy sexy companies. I buy companies that can rely on to keep you and paying very nice big fat dividends like Kraft is paying you. Kraft is paying us a 4% dividend. It's making expected next year by most analysts to make around $2.50 a share, and they're paying us you and I $1.60. Even if their earnings get hurt, and even if there's less Heinz or Kraft cheese sold in Ukraine, and Kraft doesn't have much exposure. Some of our companies do have exposure, like Total, the French oil company, or Exxon, which has some Russian exposure. I think that these are the types of companies that are going to continue to pay you the dividends that you need to fund your retirements. And for those of you who don't need it, well, we're just reinvesting those dividends. We're just taking the next chart here. Over time, you can see $1 million invested with Altrius in our flagship fund that's done very well for our clients. But most importantly are these triangles. And what I'm doing in my portfolio, because I don't, we turn 25, Altrius turns 25 this weekend when I founded the company. And I hope to be doing this another 25 years when I'm 78. And I'm just reinvesting the dividends as I go back into my portfolio because I own the same stocks that you own. I invest side by side, as do all of our Altrius associates in our retirement plan. So we're fully invested with you. And when you look at it again, and we go back to the map here, I think that's my baseline assumption is that we're going to have a scenario that a portion of Ukraine or possibly all of Ukraine is overtaken. And I think that's something probably the world will be able to live with. The world is not going to be able to live with an invasion of Poland, and certainly not Germany. And interestingly enough, Germany and Italy did not support more significant and serious banking restrictions. The SWIFT, which would have been much more restrictive on the Soviet or the Russian nation, because they didn't want to put something so onerous on them to not allow them to back out, and that would certainly stifle. But part of it is because Germany is so reliant upon Russian energy. It kind of lets you know the stupidity of our energy. I've lost 30 plus classmates, mostly fighting for oil overseas, and it's not something I'm happy about. And I think that it's something, energy independence for us, whether I'm a big proponent of nuclear, would make a lot of sense. And until we find other alternative methods, we can't light up a grid. I mean, here in Montana, it's half hydro, which is great, but it's half coal. And I'd rather see nuclear because nuclear is cleaner than coal. And I love the clean air of the mountains here and want to keep it that way. And I think that until we find other alternative ways, this certainly is something from a nationalistic standpoint that we need to do, and that we will do. We're seeing that now as whether it's drugs that are made and produced in China, we're bringing those supply lines back home here to the United States. That will drive costs up a little bit as we do so, but it's necessary for our national security to do that, and to rely on partners like Canada that are good partners, or whether it's the Keystone Pipeline that for some reason we've turned off, probably for our environmental reasons. That there's things that we can do to become less reliant upon energy here in the United States. But Germany is not in a situation that they can do that. They've kind of, and much of Europe is not in a situation. France has a mostly nuclear power, but many of the other European nations are much more reliant upon Russian oil, and in particular Italy and Germany, which is why they probably didn't want to turn off the SWIFT banking mechanisms. So that kind of tells you that Putin knows that much of his GDP. Remember, the Russian GDP is it's less than the GDP of Texas or New York or California. It's not a huge GDP. It's 13th, 12th in the world, somewhere around there, and much smaller than even Italy's GDP or Germany's GDP. So they're hugely reliant upon energy to fund them. So they don't want to. Putin's also trying to thread this needle too. And like I said, I don't think he's crazy. I don't think he wants to invade Lithuania and Latvia. And so I think what he's doing and seeing these strategic strikes that he's making kind of makes sense to me, that he's not looking for all-out warfare or to occupy Ukraine this time. He's just trying to cut off the head, put in a puppet dictator. I think he may have a hard time doing that. So at this time, we're not going to panic sell all of our positions and say, okay, we think that this is a time where we're going into all-out war, and nuclear war. I think this is one of these events throughout history that we've seen over the last 25 years since I founded Altrius, or really over the last many, many decades, that is a typical type of conflict, and I don't think it's going to spread out further. So I don't think it's time for us to sell stocks. And that's our strategy right now for you, is to continue to get you income regardless of these crazy ups and downs that we're experiencing. Of course, last year we had a terrific year. We were up 15%, and we're holding on to most of those gains. Much better than the market is holding up, because people moving into quality companies like ours, like the Krafts and the Procter & Gamble's and Pepsi's and Nestle's. So with that, I'm going to open it up. I'm going to unmute everybody here and open it up to your questions for your worries and things that may be on your mind. Unmute everybody here. Okay. Go ahead and throw out questions.
We took such a hit today.
Could be some questions. No questions out there? I know there's a lot of concern. There's some nervousness.
Well, I guess the concern I have, the concern I might have is that I'm not really that worried about the market with respect to what's going on in Ukraine right now. But the next step is China. How do we begin to look at that? Because I don't think it's going to stop here. It's going to go somewhere else. And if China gets involved in something different, the market really is going to change.
Yeah, and China's much bigger, I think a larger concern. Obviously a nuclear power, and their actions have been very aggressive in South China Sea, and they've disturbed a lot of their own neighbors, whether it's the Philippines or Vietnam or Japan. And I'm sure she's looking at this in bold and saying, how much resolve does the United States and Biden have? And, can I go into Taiwan and just take it over? And he's going to be watching this very closely and looking at the world's resolve. And I think that's one of the reasons why we have to put up a strong defense here, not a military one, but at least an economic one. I don't understand what China is. I don't understand what China is doing. I don't understand a lot of the. They were growing. They were accepted into the World Trade Organization. Their economy is growing rapidly, and they've benefited tremendously. I don't understand the actions they're taking against. They're a one-party capitalist type of system, but they're moving more and more communist again too. Taking money away from the more powerful, and Xi's kind of consolidating his power. I think these are the mistakes with China isolating itself and people not trusting China, whether it's with what happened with COVID and not being honest about what's occurred there, or it's obviously stealing, our intellectual capital. China just can't be relied upon. So that's causing the world, not only the United States, to pull back from China. And so I think that's gonna harm China. And we're moving those. We can. Arnie, our little stuffed animal here, is made in China. It's fine for Arnie to be made in China. We could import stuffed animals from China, but we're not going to import serious stuff and electronics and things of that nature from China, because we can't rely upon them, and that's going to hurt them. But we will make these things other places, whether it's here or whether it's with more reliable partners, including India, which is a tremendously growing economy. When you look at the world economies, I think that's something that, as you see other nations grow, if we look at the world economies, India is now, sixth and growing. And India is benefiting from China's recent actions because it's a more reliable partner with tremendous, intellectual capital and very, very highly intelligent, and a third of the cost of American workforce. So, one of my associates said to me, "Why do you employ me? You can hire an Indian for a third of the cost of me." And I said, "That's a good point. There's only a 12-hour gap, but they work on, they work on our time zones, and that's one of the reasons why I think inflation will stay down too." So, China's, certainly an interesting situation, and they're watching this very closely because Xi's gotten into bed with Putin, as we saw at the Olympics. But Putin's very smart. He waited till after the Olympics were done. He slowly positioned his forces, and in classic military, he kind of has the siege going on, and it'll be interesting to see how the Ukrainians fight back on this. But I don't think, I think companies are doing that too. Whether it's Coca-Cola or Procter & Gamble, they realize, what, we'd love to sell to all these billions of people in China, but we're going to find other outlets for our goods. than selling this, so we could sell it to other parts of the world that are more reliable. So as they're forced out or their capital is stolen, they'll move to other parts of the world and other parts of growing economies. So that's sort of my thinking on. I'll unmute everybody again here too. And I'm not sure if I answered your question, Mr. Rod, but China's a worry, and that's one thing as we enter this new Cold War. But it is in both of our interests, China's, the United States, Europe, Russia's interest, for us to pretty much get along and trade. It's in Russia's interest to trade its energy, its oil, and natural gas to Europe, and it's in China's interest to sell to the United States. So what they're doing is not rational from an economic sense, but it may be they think that they can grow more from a land grab or a power grab. But I think that they're both making mistakes by doing it.
Hey, Jim.
Any other,
Jim,
yes, sir.
can you hear me, Jim?
I can hear you loud and clear.
All right, good. I just want to. I think what I heard from you tonight is that we're more or less invested properly at the time. Dividends shouldn't suffer too much, if little. Not a time to sell stock. My question would be on the interest rates. I kind of missed it maybe at the beginning. What do you think is going to happen with the Fed in the next 6 months or a year or so interest rates?
Yeah, the Fed kind of gives us a nice outline of their thinking in time with their dot plot, and the Fed has certainly changed. I had one of their the Chicago Feds, one of my son's friends who works for the Chicago Fed was here with us over Christmas, and I was making fun of him, he said, does our communications help you guys in terms of? I said, no, because you guys don't know what the future holds. I said, look at your own dot plot, which if you look at this, a year ago in September of 2021, not even a year ago, just, months ago, they thought they'd be raising very slowly, whereas now they're showing you that they're expecting, to be 1.5% higher. That means quarter point, 6 times that they expect to be raising rates in order to, stifle inflation over the next year and a half. And so that's the outline that the Fed is giving us now, and I take them at their word. Now, what will happen is if inflation doesn't get in check, then they're going to have to raise quicker. They're going to have to do, half a point, kind of like what Paul Volcker did back in 1981 or 82, whenever he just 3% in one day, boom. And that was, immediately slammed inflation. Gold prices got, cut in half because gold prices usually go with inflation. And so we saw an immediate, correction in inflation. But it's never politically palatable when interest rates jump up that high. And we've seen, if you look at the, you look at the 10-year Treasury, the 10-year Treasury is acting very rationally. It's expecting the Fed to raise rates. It's getting ahead of the Fed. And as you can see here, we've gone from 0.8 at the beginning of last year, to if we look at year to date, not even the current month, just in 2022 here, you see the 10-year Treasury went from 0.8 to double. It went to 1.6%, and then quickly this year ramped up all the way to over 2, and then because of today's worries a little bit, kind of come back down to 1.96. I suspect that you're going to see this 2%, Treasury continue to go higher, and this is good for at least your cash. That eventually, your CD rates, which if you look at a 1-year CD right now, it's at about 0.5% probably. It's not, it's just like a 1-year Treasury. It's just not paying very much, but it is going higher. Right now a 1-year Treasury is acting rationally, expecting the Fed. It's gone from 0.4% ramped up to 1%. That's a huge move in the Treasury market. So I think that we're at historic 40-year lows for the bond market. We're going to see bond yields start to rise again. One of the reasons why your portfolio and my portfolio is only at about 20% in bonds which has been good because our bond portfolio has been one of the few sections that's been down this year. Not down as much. We were only down about 3% or 2.8, which is better than the bond market as a whole, which has really gone much lower. Is because we don't have much in in bonds in your portfolio. We only have 20%. The yields that we're getting are only around 5.5%, and I would rather own a Procter and Gamble or a Kraft that's paying you 3 or 4% than own a bond that's only paying you 5%, and we can still have defaults. We can still have companies like Goodyear Tire or Zales Jewelers or any of the companies that we own go bankrupt on us. So because of that, I think that you're going to see these rates. The bond market is starting to act rationally. I don't know why rates haven't gone up sooner, but the Fed's going to have to start acting, and that's going to push rates up even higher as soon as they start raising interest rates. And I couldn't hear all your question, Lou, so I hope I got it. Did I answer it?
Jim, this is Lois. Can you hear me?
Jim, how are you?
Hey, this is Lois. I wonder if you see any effect at all by the demonstrations like the truckers' blockade.
I couldn't hear you, Mrs. Weinhold. What was your question? What was it about?
My question is, can you see any from the threatened truckers' blockade and other demonstrations like that?
Oh, yeah, the truckers' blockade. I think that, so Canada obviously had an issue, which hurts GDP a little bit when any type of disruption of trade is always bad in the short term for the economy. So Canada's trying to clamp down very hard on the truckers, and here in the United States, I'm not sure what kind of a trucker blockade we may see here in the United States as a protest, because even Democrat governors are opening up their states. We're seeing that in New Jersey and New York and Connecticut. So I don't think there's as much to protest, whereas Canada still has some, more draconian measures in place. And here in the United States, we're not forcing people to be vaccinated who aren't working for the federal government or other institutions. So here in the United States, I guess we have less to protest. So I don't suspect that we're going to see much of an impact on GDP or the economy from any protests that go on with our own truckers. I mean, I always like to see peaceful protests to make change, but I do like to make sure it's peaceful. Whether it's far right or far left, I want it to be peaceful. We don't want police being shot. We don't want economies and businesses to be harmed. I think that's important across the board. Everybody has a right to their opinion, but not to harm other people. So in this particular, I don't see any. I don't really see any economic impact on any further trucker type of backlash. Things are opening up. Here in Montana, everything's been open, right? Kids have been going to school unmasked the whole time. And in New Jersey, everybody's clamped down. In New York City, I walk around and everybody's masked outside. And people are starting to, they're starting to get over that and realize that we're living with COVID, which has been my positioning all along, is that you look at COVID, it's sort of a two-year cycle, much like the Spanish flu. And I positioned portfolios that we would eventually recover. I never thought we would recover as quickly as we did. I'm glad that we did, and I'm glad that I was right on that case. And certainly we've had Delta and other Omicron and other things pop up that kind of set us back. But that's natural. We're going to continue to have viruses mutate, but we're moving on and learning how to live with this. And those who are vaccinated, who want to be vaccinated, have gotten vaccinated to get protection. And those who don't, will continue to do so and are less at risk, whether it's younger people or those who just simply don't want to be. Yeah, mute everybody here again. Throw it out to any more questions. I hope I answered your question, Mr. Final. Was that I answer you okay? any other questions out there, or comments, or things you think I should be thinking about that I'm not thinking about right now? Mention.
Thanks, Jim.
Always good to throw things out there because we have such a smart, demographic and diverse, different opinions from our 400 plus clients, and it's always nice to get input from all different people, from all different sectors of experience and levels, and I always appreciate your feedback. So anything you could tell me that, I did get one comment who said like, hey, I should be thinking more about crypto, and most financial advisors are putting a piece of their clients' portfolios in crypto. I think that's just nutty. I certainly understand the blockchain technology. That is amazing, and that's going to help society across the board. Whether or not cryptocurrency is here to stay, I don't even like calling it cryptocurrency because it's not a currency. It's not, certainly not stable. Something that was 60,000 now down to 38,000 isn't stable. It's not yet a means of exchange acceptable. It might become one. It might become stable. It might become a means of exchange. But currencies are backed by a nation's taxing authority. And Bitcoin, although it could be like wampum, it could be, it could be shells or something that we're down the road. We're all happy to be to having it. I have a crypto Bitcoin, a fake one I got on Amazon, and I always ask somebody if they want to give me $38,000 for it. And at some point in time, maybe people get used to that. I think it's lunacy, and I don't know if Bitcoin's going to 200,000 or if it's going to zero. But I'm certainly not going to risk your life savings on something that can't even be valued. I can't, I can value ExxonMobil, I can value Coca-Cola, I can value Altrius, my own company, and say, okay, it's a reasonable price I'm paying for something, and it's paying us a dividend, and it has the cash flow to meet that. We're not going to buy clown companies. I'm not going to buy some company like, Splunk, or some hot company that some young people may enjoy looking at, and I'm looking at Splunk going, they're going to lose $1 billion next year. They're not paying a dividend. Every analyst on Wall Street knows that they're going to lose money next year. One of them thinks they're only going to lose, 250 million, and most of them think they're going to lose $1 billion. I'm going to hope that company is the next Amazon. No way. Not risking your life savings on a company like that. But Bitcoin, I can't even value. Nobody knows how to. The crypto people who are big believers don't know how to value it. They have no idea. So if they don't know how to value it, I certainly don't, and that's not something that that we're going to get involved in. And people will say, and financial advisors will say, you should do that. And I'll tell clients who want to do it is go ahead and speculate on it, but don't speculate more than you're willing to lose. It's like going to the roulette wheel and you're throwing it down on red, or black, and you just don't know how that's going to end up. And that's not something that's speculating versus investing. That's not something I'm ever going to do with your life savings or mine. Sometimes people say like, Jim, you got some money in crypto, right? No, I'm invested in the same exact stocks that you are. I have to show that. I'll bring up my portfolio and show clients like, hey, here's our, here's Altrius's, which is with, all of mine. If I brought it up right now, I'd show you that we own the same exact stocks and bonds that, let me pull up the Altrius 401k here. It's and all of my retirement is invested in the Altrius 401k. And if I brought it up here, pull it over so you can see it. Here it is. Make it bigger. This is the Altrius 401k, and you'll notice we own the same stocks you do. We own AT&T and Bank of America and Bristol Myers and Caterpillar and Hanes brand underwear and Pepsi and international companies like Eaton Corp or British Petroleum or Bayer or GlaxoSmithKline and Nestle Chocolate or Unilever. We own the same stocks in the same percentages. I mentioned that we're only at 20% bonds, and you can see that's it. That's all we got is 20% bonds right now because of the problem with finding good yield in the bond portfolio for you and I.
But why does it keep changing?
I don't know. It says you're unmuted.
It says mute
Unmute
yourself.
everybody again here. Throw it up to more
It
questions.
says you're unmuted, so that means.
Any other questions up
Yeah.
there?
If you want to say
I can
something.
hear somebody
Jim.
who's asking something, or maybe they're just talking amongst one another.
Jim?
Yes, sir.
Hey, Jim, it's Michael.
Michael.
Can I ask you a What do you think about Google doing a 20 to 1 split in July?
Yeah, so that's a good question. With any company, a split really doesn't mean anything, right? So I could split Altrius's stock. Let's say Altrius is worth $10 million. Okay, and I have 10 million shares out there, at $1 each. I could split. The company's still worth $10 million if I split my share price, because the share price starts getting too big, because I founded the company 25 years ago, and I founded it at $1 a share, and now it's $600 a share, and I think, oh, $600 is too much for a retail investor, so let me cut my $600 down to $100, and I do a 6-for-1 stock split. It doesn't matter. The company's still worth exactly the same. The good thing for stock splits is usually it means the stock price is going up. So you can see if Google, or now it's called Alphabet, just like Facebook is now called Meta or whatever, you can see that $2,600 is a lot. A lot of people, younger investors, may not have $2,600, so they could do a 20 to 1 stock price, or a 10 to 1, and it goes around to $260 a share. It doesn't really matter. It's still proportionally the same. And to me, Google and Amazon and these companies are still overvalued, and of course don't pay you a dividend. If you look at one of the things that we sent out, and I've been warning about when I wrote my book, 4 years ago, I started warning about cheese. And when I was on Fox Business, I said to the Fox Business anchor, I said, do you know that 17% of the S&P 500 is made up of a handful of companies? And in the break, she said, are you sure it's 17%? I said, yeah. I looked at it just this morning. I said, well, now what's happened is it's gone from 17% to 25%. And of course, Meta, got cut. Facebook just got cut significantly. It just went down 20% last week, or 25% in a day. Because the valuations are crazy. So I couldn't buy the Cisco's and Microsofts, back in the day, because in 2000, those companies were selling. They were the Amazons of today. They were selling at 100 times earnings, not paying a dividend. And I often show this chart here, where back then you can see Microsoft was the largest company in the world. General Electric was second. Of course, we know what happened to GE. Exxon was fifth. Walmart was fourth. Company called America Online, which some of you may remember, which is now gone, or Lucent Technologies. These are the largest companies in the world that are now just, much smaller. Intel. And, when those companies got cheap, I was able to buy Microsoft, and we made a lot of money on Microsoft, and I subsequently sold it a few years ago. We made a lot of money on Apple. And I sold Apple, last year. We're not going to buy the stuff that's really expensive. And because of the proliferation of indexing, where people just buy the S&P 500, the big get bigger just by nature, right? You have major states, California or New York or the New Jersey fire and pension, where they just blindly buy the S&P 500, and that's fine until these companies get so big and they take up a big proportion. It's one of the reasons why you're up this year, flat this year, relatively flat this year, while the market is down significantly, because all of these huge companies are taking a beating this year. So to me, I don't want to buy Google. I don't want to buy any of these companies. Again, we've owned Apple in the past. We just sold it last year. We owned Microsoft and subsequently sold it. We're not going to buy Amazon or Tesla or Google or Meta, because they don't pay you a dividend, and they're still expensive to me. When you look at the valuations of the companies that we own, what you'll notice is, if I go to the portfolio analytics, is our U.S. companies, and you can see here, they're really cheap. I mean, we're selling at 13 times trailing earnings and 12 times forward earnings. If you can look back at the last 100 years of history, what stock prices sell at, you're looking at 13 to 15 times earnings. Well, the S&P 500 is, well above 20 times earnings. It's expensive, and I'm not going to pay too much for anything. We're disciplined investors. Our process works. And, it may be that there are years where the S&P 500 just zorches because people are chasing. They're like lemmings running off the hill, just chasing that hot dot. We're not going to do that. We're not going to, thank goodness we don't own Facebook. And I've been told by other asset management firms or financial advisors that we sell to, In fact, I'm meeting with one financial advisor yesterday. He's like, yeah, I own Facebook, but everybody owned it. I had to own it. I was like, yeah, well, everybody could jump off the Brooklyn Bridge too. It's not that bright of a thing to do. We're not going to do it. It's just like I'm not going to buy Bitcoin. And somebody could say, Jim, you're stupid. You know, the world's passing you by. Fine. We're not going to buy stuff that's stupidly valued. We're just not going to, like the email I sent out a couple weeks ago, we're not going to buy clown companies. It's just not what we do. We're not going to buy companies without earnings. We stay disciplined. So, you know, we're not, at least Google has real earnings and real profits, but it's still too expensive for my taste and doesn't pay you a dividend. So we're not gonna buy that. I'm not sure if I answered your question or not, Michael, but if I didn't, let me know.
Yeah,
People might not like my answers, but at least I try to make them thoughtful. And then when we have we've been doing this 25 years, and it has worked for us. That doesn't mean it's going to work the next 25 years. I think not getting involved in things that are, you know, the booms, whether it's tulips or whether it's Bitcoin or whether it's overpriced stocks, avoiding that, as I'm often teaching my younger advisors and analysts. It's a bad idea to do these sort of things. They don't often listen to me, just like my kids don't often listen to me. My kids will go off and buy crazy stuff, and I want them to get burned on it and learn while they're not investing any money. They're like, I put $400 in this and I lost my money. I was spending an hour with my oldest son, Maximus's roommate, who's a very highly intelligent. I lost a lot of money on this. He's very wealthy. His family is Korean and he comes from exceptional wealth. Good for him to make these mistakes now while he doesn't have much money. Where his father is probably going to be more prudent and not investing with a firm like ours and not putting his millions into Bitcoin. Any other questions out there or concerns that may be on your mind?
Tim, Rob Skrotsky, I have a comment. You mentioned nuclear power, and you also mentioned Germany and Italy. Italy in the 80s had operating nuclear plants and constructing new plants, and they rejected it. They shut down their operating plant and stopped their whole nuclear program. Then Germany, after Fukushima, shut down their nuclear industry, all of their nuclear plants. So they have put themselves into a situation where they're energy dependent on Russia. Now, when you think about NATO, NATO will not be effective as long as those countries are dependent on Russia. And I see an issue with the Baltic states. The Baltic states will reject any advances by Russia, and we, via NATO, are committed to the defense of the Baltic states. Well, given the situation with Germany and Italy, this whole thing could collapse. And that perhaps is what the Russians are hoping for. And if that happens,
and you are a bigger proponent of nuclear than I am, and I'm in full. I think that Germany is quickly realizing, hey, this was a mistake, and then they can reverse course. They can go more nuclear like France has, and Italy can certainly do the same, and they can change course, and they likely will, because if they can't rely on the Russians to provide them the energy that they need, then they're not gonna, they're gonna find alternative methods. They're gonna find alternative ways to power their economies, and that's just rational for those nations to do that. And you're concerned about NATO, and you can see that the NATO nations that are in here now too. Everybody is concerned and most concerned about, and that's the Nelly bar the door scenario where we're in World War III. And in that case, you're probably going to have to find another manager, because I'm probably going to be recruited to go back and fly C-130s, and I'm still somewhat capable at 53, and we'll probably volunteer too to do it. And I think that's a horrific scenario that both nations know, and the world knows is untenable. That mutually assured destruction. This is where you got to hope, and it's likely the case, that whether it's a crazy dictator of a smaller nation or a dictator of a larger nation, they really enjoy power, and they don't want to lose it. And a nuke being dropped on Moscow is a quick way to lose power. And so no nation, in my opinion, really wants that unless they're some sort of religious zealot and think they're going to heaven in some way for those type of actions. So I don't think that's the case with Putin. I think that psychologically, if you kind of get into his head, which nobody really can, his actions to this point are rational. And I don't think he does not want. He just wants to make sure Ukraine and that he's being surrounded here is how he feels like, and he wants to push back. He would love for the old Soviet Empire to come back, but he knows that Poland's not going back. Right? The Polish people are not going back. The Ukrainian people are going to probably fight like hell not to go back. So from that perspective, I think that from a probability standpoint, it's highly unlikely that we have World War III. And under that scenario, and that's the way I'm positioning portfolios right now. It could change, right? Things could change. Sometimes there's ramifications from actions that happen where, we've got the World War I lesson when Archduke Ferdinand and it was shot, and then it pulled all these. That's why George Washington said, be careful of alliances that can pull you into directions you don't want. We're in an alliance with NATO. Whether or not we would go to war for Latvia is a whole nother, or Romania is a whole nother question. Not sure. Most people don't want their sons to die for some of these old Soviet that have now become free and they're enjoying their freedom.
Changing
We'll have to see from that perspective whether or not those nations are willing to, how much they're willing to fight. And I think the Ukrainians they're fighting back. They're fighting back quite strongly right now, and I think most of the world will say, okay, Russia, you can have, you can chop off this part of Ukraine, and this gives you some additional access to the to the Baltic Sea. Just like why they wanted Crimea, right? It's the same type of thing. It just gave them more access to the Black Sea. So from that perspective, the actions are certainly rational on Putin's part. And then secondly, the question is well, does he think the same about Estonia, Latvia, Lithuania, and others? And we'll have to see, but I don't think that's a high probability. So with that, I'm going to open it back up again, but I'm going to stop.